Hello everyone, this is Harry Swaminathan of OptionTiger.com. Today is May 8th. It's about 1:20 in the afternoon. The markets are nicely stable and up by about 5 points. I wanted to show a potential trade for today. Priceline is reporting earnings today, and let me show you what I'm looking at. So if we look at our Priceline, Priceline is reporting after the bell today. So this is a speculative trade. And if you don't understand the trade, then you shouldn't put it. Usually this is sent out to our trading ideas customers, but I see a really good opportunity here and to make a nice return. And let me explain what that is. The Priceline is reporting today. The current price is 732, and you can see that the implied volatility of the weeklies ending this Friday is about 82%. But if you look at the next week's expiry with 9 days to go, that's almost 50%. And even that is about 20 points higher than what Priceline's normal volatility is. So the expected move, if from this earnings report, is plus or minus $42 or $43. So you can add 43 to 732, and you can subtract 43 from 732, and that's going to give your expected price range. And that expected price range is a 1 standard deviation move. So obviously about 68 to 70% of the time it's going to be there. But the trade that I'm looking at has a much better opportunity. So I've already put this trade on for our trade ideas customers. And what it is, it's a short strangle. So if you don't understand what a short strangle is, then you shouldn't take this trade. Perhaps you can take the trade in a smaller contract, but you need to understand what the trade is all about. So if you look at the plus or minus 42, 732 plus 42 would be about 775, so which would be somewhere here. And 732 minus 42 might be about 690 or 685, which is somewhere here. So you can see that I've placed the short strangle at a strike price of 800 and 810 and 660 and 650. So this has a potential profit of 9,900, but it also has a margin of about 120,000. So it can generate about an 8% return in the next few days. And most of that return will come tomorrow. So if you wanted to close out your position tomorrow, that would be fine. But as you can see, even beyond the 1 standard deviation move, we have a good $20, $30 room on either side, so which makes it a fairly safe trade. And all this volatility is going to come out. So even if about 20 points of volatility comes down, you can see that the Vega is about 626 on this trade. So 20 into 600, that would be about 12,000. So which would basically get our entire maximum profit very close to it by tomorrow, and depending on how much Priceline moves. So this is a short strangle. I'll be following it up with a video tomorrow, but this is a very good opportunity. So I wanted to send it out to everybody. And if you understand what this trade is about, you should take it. Perhaps with a small contract size. I've got about 15 contracts on each side of my straddle. I've got 12 plus 3 and 10 plus 5. So I've got a 15 contract straddle going, but you don't have to do that. You can take a 2 contract or a 3 contract to keep your margins under control. And this has a very good profit potential in the next 1 day. Thank you.